just have a partner, someone you can debate with, you can uh, agree with and disagree with, and learn from. So yeah, just have a partner, have a mentor, have a partner. It's better to go together. You go farther, maybe slower, but farther.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. What's up, everyone? Welcome to the episode of Path to Passive Real Estate Investing for Tech Professionals. This episode is awesome. I get a chance to talk to Sasha Tsimbler, and we go through his journey from all his time being in tech, but his journey from investing in the stock market to single family homes, Airbnb, and converting some of those to long-term rentals, as well as finding multifamily investing or apartment investing, as we know here on this show. So we get to see the decisions that were made of why he went from stock market to real estate, and also compare some of those as well. And for many of you that might be listening, I know that I have asked a lot of questions that I hear from my colleagues or investors that I work with too, of, where should I start? I want to get into real estate. I'm working in tech. I have my RSUs, my stocks, or I have some cash, but I want to invest in real estate as well. So where do I go? And so Sasha shares a ton of things, lots of nuggets along the way, really, of pros and cons for each of the different asset classes, stock market to single family homes to commercial. And if he could do it all over again, what would he do? And so I think there's a ton of learning here. So if you're in that place where you're thinking about, hey, I want to invest in real estate, but I'm not sure, should I do an Airbnb, a single family home? I might have my own primary residence ready and, pretty good, pretty solid financially, and I'm looking to invest from here. Where should I go and check out? I think this episode is absolutely for you. So if you have additional questions after listening to this episode, I highly recommend you can reach out to Sasha. His contact info is inside of the show notes. And if there's any topics you want to go deeper in, please let me know as well. You can do so on LinkedIn. You can reach and connect to me there. You can reach out to me in email, whatever works for you. My contact info is also in the show notes. I'd love to hear from you. What is one thing that you pulled out of it, right? Would be something great too. So if you can, be sure to take some notes, mentally tag something too if you're not able to while you're listening to this. But definitely pay close attention. There's a lot of nuggets learned along the way, so definitely leverage his experience. And so if you think someone else could also benefit from this, please go ahead and share this as usual, like, subscribe, all of that things. Appreciate you. Sit back, enjoy, and listen. Dude, Sasha, man, it is good to have you on the podcast. We have been in the same mastermind here for multifamily apartment groups for a couple years. And since meeting you, I'm like, oh, dude, you're in tech. Like, I'm in tech. It was a perfect place, for us to meet, have this conversation. I know I have many conversations with colleagues and investors, like, where should I start with real estate? Should I get my first long-term, a rental, an Airbnb, or what else? And you have a really cool story because, you've done tech, you've been in tech, you have gone to stock market, gone to, Airbnbs, long-term rentals, and also now here in apartments. So we have a lot to get into, and I'm super excited to dive into all this, man.
Let's do it.
All right.
Good to be here.
Yeah, man. Talk to me. Before you tell me the story of how you got into real estate, tell me what you were thinking, the whys of why you got into real estate, right? You're in New York City, hustle and bustle in tech. And talk to me about, what were the first ideas of like, I should get into real estate? Walk me through that.
It's interesting. And I don't know if my story is unique or not. It probably isn't. But it wasn't really my idea to get into real estate. It was really my wife, who actually girlfriend at the time. But I'm a lifelong renter, New York City, Brooklyn resident of 15 years. And stock market investor. I've never considered investing in real estate. Sometimes I did entertain the idea of buying a condo in New York,
Mhm.
but that comes with a. It's not well. It's not cheap for sure, but it's also it also comes with maintenance fees of thousands of dollars. And so it never really panned out. So what really got me real estate is my girlfriend and my love for her. It was really just she said, "Hey, I really want to get into this." And when we started dating, she was already flipping a house in New Jersey. So you can imagine a scene of me leaving my Brooklyn apartment in a car we just bought. This is COVID, uh, with the trunk open, delivering a door from a Home Depot in Brooklyn to this flip in New Jersey. Don't ask me where in New Jersey. As a real New Yorker, I have no idea. It's
Of course.
Jersey.
Of course.
So anyway, so yeah, that's how it started, and then we ended up in Austin. That's another story. We drove here. We ended up in a house that she found that she wanted to buy. It was a bit of a wreck in Buda, Texas, that we ended up purchasing. So anyway, she was the driver of all this stuff, and first we got into BRRR
Hmm.
together when she was done flipping that place in Jersey. Then we started doing Airbnb, short-term rentals, in some places mid-term rentals, just because of regulation.
All around Austin.
Uh, all around Austin, all in and around Austin. Yeah. So viewed East Austin, Leander, Lago Vista. I think
Got it.
that's it.
All the
Yeah.
suburbs around Austin. Yeah.
Yeah, exactly. We Austin. But anyway, so yeah, and now later long-term rentals because we decided that Airbnb is just too much work, too much hassle for not enough returns, and then we got into multifamily. So yeah, long story short, to answer your question, how did I get in there? Someone else pulled me in, someone I really, really care about.
Did it did it take any selling for you? Were you like, I don't know about this, or was it like, like kind of checks
There was
out,
a
makes sense?
there was a lot of I don't know about this, because like when you're signing your also like we're not even married yet, right? Like, and so this is, a very special person. We've been together, I care deeply about this person, and I'm signing my fifth mortgage, so like,
You're committed now,
wow,
buddy.
what? Yeah, exactly. So but yeah, there were a lot of moments like we've bought, a bunch of these already. Well, why do we need the sixth one? And why are they all wrecks? But there was a lot of education that was happening as well at the time. You meet a lot of people when you get into this, and also I had to push myself. Right, it was uncomfortable, but it felt like she was already there, and so I kind of wanted to catch up.
Hmm.
Uh, so yeah, that really was what really got me there.
Curious. I'm looking for exact numbers, is kind of ballpark. It's interesting that she was already doing that a bit. Like, do you have any sense of how many flips or how much, investing she'd already done, even I guess in Jersey before you guys started, doing that
Hmm.
in Austin?
And that flip in Jersey was ridiculous. I showed up there, and as soon as I saw the contract, I said, "You need to fire that guy," which she did. But that was the only flip she did in New Jersey. She bought a house at auction in Oklahoma and ended up selling it. I think it was a kind of a wholesale deal. And then she bought a sixplex in Oklahoma City that she kept for a while, uh, slight light rehab, and put with a bunch of long-term renters in there. So that was her
Cool.
experience. Yeah.
Got it. So a couple of deals under her belt, but still like uh kind of, maybe like two or three of them. Okay, awesome.
Yeah,
I
that's right.
mean, still a little bit ahead of the journey, and like you said, kind of pulling you into it. But I'm really curious from your perspective. You were talking about getting out of your comfort zone. Can you remember what some of those kind of I'm not sure about this moments were?
I think a lot of it had to do primarily with being in debt. The just the concept of being in debt. I I had a moment in my 20s, and I think many people do. You get out of college, you get credit cards, you get credit card debt, and then you know, about $15,000 in, you're thinking, gosh, I actually have to pay this off.
Mm-hmm.
How do I pay this off? And so for me, that moment happened when I was 26 or 25 when I moved to New York. Uh, you get to New York, you want to spend money on everything, you want to do all of it, yet you have no money and you have debt. So I remember spending the first 2 years in New York paying off my credit cards and telling myself I'll never be in debt ever again. A promise I kept for the next 15 years. Uh, and I think the big hurdle for me here was that, oh my God, I'm signing up for hundreds of thousands
Mm-hmm.
of dollars of debt. And I think what really helped was that the what Sophie, sorry, I never mentioned her name. My wife's name is Sophie. I love her. She's amazing. So
Yes, he's awesome.
Um, Sophie explained this to me, right? Like the concept of leverage, right? So the concept of leverage uh, isn't really apparent in the stock market. Of course, it sort of exists, right? You can do, you know, uh, ultra shorts, whatever, all that stuff. Option. So yeah, there is leverage, but leverage here is pretty simple. You put down 20%, but you buy 100% worth of an asset. So that helped me a little bit, and then also the fact that during that time mortgages were 2, 3, 4%. So it was less than inflation or about inflation. So in my uh, rational mind, it sort of makes sense, right? So, okay, you're kind of not really in debt. You're leveraging mm, the money that's given to you. So, and it's growing faster than the what you own it. So, yeah, that was helpful.
Awesome. I know you mentioned stock market. I do want to get in that. So let's kind of pivot from there. So tell me, I didn't actually ask you what your background on tech wise was, but I am curious. Can you just give a quick overview of what your background on tech is?
Sure. Computer science background. Went to the University of Maryland. Anyone who went there, called Terps and all of that. Don't really care. But anyway, yeah. So got my computer science degree. Liked writing code. Didn't love it. I did it for 7 years, and then I pivoted into design or user experience design, product design at the time. I think that's what I've been doing for the past 15 years. I'm more into product management, product experience these days. But yeah, definitely design, but ex engineer.
Totally. And I know you're giving the quick overview, but you've done a ton of stuff. You've done stuff at Grubhub, Google, director of product design and UX research. So just wanted to add that in for you too. But talk to me how, so that was how you got in that, but how did you get into stock market? Because I really want to paint this picture for the listener, right? This story of yours of going from stock market to single family homes and ultimately here to multifamily is like is such a good path to talk about because we can really save time, and I'm sure a lot of heartache and lessons learned too. So I really want to go through how you went from stock market to bridging that gap to real estate and then ultimately where you are now and kind of
Mhm.
your investing thesis, your investing plan and what you're thinking about now today.
Yeah, I think when I was in my 20s, so as soon as I got out of that debt, that credit card debt we talked about, my goal was to never be in that debt again, but also to get rich, obviously. I remember finding this website, or maybe somebody showed me this website called Get Rich Slowly. Get Rich Slowly was helpful to me because it was a community, it was like a blog where people talked about paying off their debt, pay off your highest APR card first, and all that stuff. And that was I really needed that at the time. But I think I kind of just continued on with that. And so the people that are in that group, in that forum, in that community, they're get rich slow people, right? And so I kind of stuck with that, right? Every month I saved money, I put it in the stock market, invested it, I kept my living expenses super low. Every time I got a raise, it didn't increase my lifestyle
Right.
expenses. I kept it the same. Uh, it's hard to do in New York, but you can do it, or you could do it when I was there. I don't know about now, but that was my goal, right? My goal was to get to be debt free always, and to have multiple millions of dollars to retire on, right?
Totally.
And so that was the plan. Um, but the stock market, because it's easy, right? You have $100, you can invest $100 in the stock market. Like, I mean, this is way before Robinhood. Now there's Robinhood, you can put $5. But
Sure. What year was this, by
it
the way? Just
was
out of curiosity.
2020, 20, wait, how, wait a second. Uh, this is 2006, 7, 8. That's kind of me getting in the stock market.
Okay, got
And
it.
at the time, yeah, at the time it was kind of like, well, what do you invest in the stock market? What do you do? And so I made a bunch of mistakes. I bought individual stocks, and then I think with the rise of ETFs, that really spoke to me, like passive investing. Fantastic. Let the pros
Right.
figure out how to beat the market. Maybe they'll do it 50% of the time, but I'll just go for the beta, and get what everyone else is winning, and when everyone else is losing, that's okay. I lost too, but then everyone else lost, so it's not like losing. So
Right.
anyway, definitely a lot of risk aversion for sure. Lower risk appetite, but I think I'm that was what I invested in for the longest time. Just S&P
ETFs
500 tracker.
and
Yeah,
and and single stocks here and there.
single stocks here and there, but I kept it on. I think I basically said, okay, under 10K you can play with whatever, but don't expect any great results, but just experiment.
Sure. And you were basically getting all your quote unquote advice, your financial knowledge off of this blog, Get Rich Slowly.
Yeah, it's this blog and your friends and your family, right? Just in my circle, I was never exposed to people that bought real estate, sold real estate, or invested in real estate at all, any kind of real estate. I was, middle class, surrounded by people that invested in the stock market, and that was obvious to me, right? Not in school, not at work. Nobody talked about investing in real estate. Even the rich bosses or whatever, the high paid C-level folks that I was sometimes near,
Hmm.
I never talked about what they invest in. So I assumed we all invest in the stock market. But then later, years later, I learned that that's not the only thing you can invest in.
Yeah. Whole new world, huh? We'll
Yeah,
get into
for
that.
sure. Yeah, yeah.
So you're investing in ETFs, investing in single stocks. I mean, how long were you doing this for? Was it kind of years before meeting Sophie at this point?
Yeah, I think we met in 2019 or 2020. So yeah, I'd say, yeah, 15 years.
Wow. Okay. So you were just you were maintaining the debt freeness and continuing to put money into stock market.
Correct. Yep.
What was that? Talk to me about that because I mean, you can keep doing that year over year. But was there any? Did it ever? Did it occur to you? You're looking at this like, I mean, it's not growing a ton. Like, will this really be, something that I can count on in 20, 30 years if it grows, however your portfolio is doing?
It was doing okay. I think that my plan assumed that everything else is going to continue. My plan didn't account for tech layoffs of 2022 to 2024,
Yeah.
maybe five. I don't know. Uh, it didn't account for having a kid. And so, I was young, and maybe in some ways naive, but very much in my bubble, surrounded by others like me, and it wasn't really part of the equation. Like real estate never even came on the radar. Wasn't even a blip.
Got it. So it was really this was in my awareness, and this was what I was doing. Okay. Well, that sounds like it was a really positive awakening for Sophie. Then give her all the kudos.
For sure. Oh yeah. I mean, that was
Uh,
definitely a something I had to grow into for sure.
Well, then, since you got more and more into that, into from some stock market to just going on until single family homes, talk to me about the contrast, right? Because you're seeing this over pretty much like a decade before getting into real estate. Like, what were some of the great things that you ended up finding out about real estate that gave you some of these aha moments of, oh, thanks, honey, I appreciate that. We should do more of this.
Yeah, it's interesting. So there's a timeline of events that where the emotions were, it went from everything, kind of what you're saying, to oh my God, why are we doing this? To can we please get out of this? Oh, we can't. Crap. Okay, I guess we just have to do this for a little longer. What's happening in the market? Oh, we can't sell. Okay, I guess we're gonna keep it. So there's a whole spectrum of emotions over the last 3 years, I want to say. But getting into, I remember the first house that we bought. I think the first thing that occurred to me is we're buying a mess of a house. Why would anyone want to live there, right? So I remember walking into houses thinking, why couldn't we just buy a nice house? Why do we need to buy this, terrible place where I would never want to live in?
Mm-hmm.
Nobody ever would want to live in. And so this concept of rehab, so BRR is a buy, rehab, refinance,
And rent.
repeat,
Yeah.
rent. Yeah, I
Yeah.
forgot
And then
rent.
repeat.
That's
Yep.
important.
Yeah.
Important to rent. Uh, the concept was foreign to me because in the stock market, you press a button and you're done.
Mm-hmm.
And here you actually have to hire contractors, fire contractors, go to Home Depot, spend a bunch of time, spend a bunch of money, deal with all sorts of things with people,
Oh, tons of people,
with
right?
regulation. Yeah, permits, all of that. It's very active.
Understand
It's
financing.
very time. Yeah, exactly. That's the financing. Um, deal with you basically you're depending on appraisers, you're depending on realtors, you're depending on a bunch of people, right? And sort of, I, I mean, to me, the stock market was much cleaner, right? There are way less intermediaries. I mean, of course, there are intermediaries. I mean, how you're buying stocks from Fidelity, they're definitely an intermediary.
Oh yeah.
Fidelity keeps their money somewhere, all of that, right? But to me, it still seems much a cleaner transaction, right? A fast transaction and a cheap transaction. Doesn't cost me anything.
Totally clean. Yep.
So, and this is wait, we have to pay what to buy we have to pay real estate taxes to just hold, and then we have to pay again to sell. Anyway, the whole thing was just I'm still not, like parts of it I'm sold on, but this part I just think is crazy.
Yeah. There's a
But
thousand and one things that could go wrong, basically, right?
exactly, totally. And so I remember like showing up to these uh open houses, and people are just like outbidding each other. This is like at the height of the market. This is Austin, for anyone who remembers Austin in
2020.
2022,
Yep.
2020.
Sure.
Uh, and so that was kind of crazy. But anyway, so we got into it. What I learned about myself is that I like creating a space or an experience for people. Not surprising. I mean, that's what I do at work. But
Mm-hmm.
this is a sort of a physical manifestation of that. So I remember lots of conversations of which smart door lock should we put, the cheapest one or like a nice one. And so those are the types of conversations we used to have. But yeah, so there's a lot of hands-on stuff that I enjoyed, and a lot of hands-on stuff that I absolutely hated. And depending on people and layers of transactions and all of that, is just don't love it. Still don't.
Yeah. I mean, even things that I had to learn too, just kind of expanding on that was, you hear things about like market and you hear things about cycles, but like you really have to start understanding and paying attention to economics and real estate cycles and, what strategy to use and stuff like that on an up or a down. I mean, you're talking about at the height of the market, for those that are listening, it's like, oh yeah, like, everything's at the top, but like tracking that over time and like, is this the right time to buy, or am I about to lose like $50,000 because this is going to be downvalued, right?
Hmm.
um,
Exactly.
But talk to me about so the intention, even as we talk about here now, the strategy of buying these. So the idea was that you were doing a kind of a burr, the buy, the rehab, um, refinance, rent refinance, and then do it again, right? Repeat. But was the exit strategy, like, was the purpose of buying to turn these into Airbnbs from the start?
Yeah, that was the goal. So the idea was to push value of these properties, right? You rehab them with furniture and you rent them out on Airbnb, short term, sometimes midterm, in Austin proper. And yeah, that's kind of what we were executing. The idea was to hold them and sell them at a time where it makes sense, but not within the first couple of years.
Sure. Tax benefits, I'm sure, is a part of that. Why did you go with Airbnb? Who's was that? Was that a, you know? And I
Oh,
really want to expand on that because again, like I talk about this, I get the questions like, "Hey, Arita, interested in real estate. Should I do a long term rental? Should I go into Airbnb?" I mean, that is a part time, could be full time job on its own too. So, talk to me how which ad got you, Sasha? Yeah, only
I
half
mean,
kidding.
so I've stayed in Airbnb since I actually checked this yesterday. I stayed my first Airbnb stay was in the summer of 2011. So
Oh,
I've been using it for a while. Uh, and what I realized just also in the all this, like Sophie and I are making these decisions together. So what I realized is Airbnb qualifies your tenants, right? You get reviews, you get all of that, right? And so they're incentivized to keep the reputation. So when they come, hopefully your house is in a better shape over, let's say, a year of Airbnb stays versus a year of someone's long-term stay. So that was kind of like the thinking. I still don't know if that's true. We had some terrible long-term tenants, and we had some wonderful Airbnb tenants, and vice versa. So we had horrible Airbnb guests and pretty great long-term. So it's a bit of a mix. What really got us into doing Airbnb is that the idea that you can push more returns through short-term, mid-term rentals as opposed to long-term.
got it. So from a for the month, or even maybe how, yeah, I'd say for the month, because unless you have it rented every single day, you have to get your total revenue divided by 30 anyway. So
Yeah.
your calculation was per month, the profits would be higher, is basically what the goal was.
The profits would be higher, maintenance would be lower. So that was the thinking.
Okay. Got you. And did that and what about from the management perspective? Did it end up kind of
Yeah, so I think this is the part where we really didn't think through. That wow, it's not autopilot. You actually have to do stuff, and no, having a cleaner is not enough. Like you actually have to manage the cleaner, manage the supplies, and deal with uh, guests that mess things up and don't tell you, guests that mess things up and do tell you. uh, you know, forget items in your unit, show up uh, uh, sometimes naked in front of your unit. I mean, this you have to deal with a lot of stuff. Like at the end of the day, like if you have an Airbnb, you're dealing with more people. Is what it is,
mhm.
and and uh, and it actually doesn't matter if it's a expensive or cheap Airbnb. Like people treat it as a hotel, for better or worse, and they expect perfection. And so if you have like a tiny stain somewhere and inconsequential, you don't get a 5-star review, and there's nothing you can do. And so basically, anyway, so we learned a lot about Airbnb. We learned a lot about the guests. Like the platform itself favors guests much more than hosts, and yeah, you can't. There are. It's hard to dispute reviews and all of that. So you're in a service industry, really.
Yeah.
You're signing up to be running a hotel without some of the benefits of having a big hotel.
I'm glad you mentioned that it's really focused on, the guest, the customer as well. I know that's a key point of how you approach things, and I really want to get into that a little bit later too. But you know what you were talking about, that that you're in the service industry. You know, it is high turnover. You're dealing with a lot more people. You know, varying amounts of people showing up naked. Who knows if that's on the lower end of Airbnbs, and on the higher end could be the same. um, but so the amount of work and the amount of management overhead, was that ultimately what you guys found that turned, you know, helped you push into longer term rentals?
Yeah, it was that because if you let's say you don't want to deal with that, right? There's companies out there that can take all of this off your hands happily, right? But if you do that, you're you're not even breaking even at that point. So like if you include vacancy, utilities, taxes,
Repairs.
insurance, repairs,
Yeah.
like I mean we're in Texas, right? The AC units here work 24/7,
Mm-hmm.
300 days a year. Like it's like I always think of like airplane engines, right? They're like they're supposed to run all the time. Like there's no like, oh, today it's just not working.
Yeah.
Like no, they're working all the time. They turn on every single time for 12 hours, at a time.
At least.
So
Right.
yeah, exactly. So yeah, I mean, honestly, I think the people that make the most money on Airbnbs are HVAC and plumbers. So that's a hot tip for anyone who wants to get into Airbnbs. Just become a plumber instead.
There you go. There you go. They're the ones that came up with the Airbnb industry.
Totally, totally. Like to them, it actually it's almost like it doesn't matter, right? You have a tenant or not. If it's leaking, it doesn't matter if you're short term or long term or it's winter or summer. That needs to be fixed. And people who have these Airbnbs will pay top dollar because if it's not fixed, they can't host. And if they host, they have bad reviews. So
Capitalism added again, Sasha. There you go.
yeah,
so,
exactly.
so tell me, give me like a ballpark here. How much time were you guys actually spending on the management of it then, right? And did that, you know, had you ever worked out? I'm kind of curious, like the per hour, you know, dollar kind of thing. Like, did the like you're saying, the more revenue end up being worth it in the end?
No, the answer is no. So
Why not?
we converted 85% of our all of our Airbnbs to long-term rentals and put people that run Airbnbs into them. So it's sort of best of both worlds. Uh, and it's better than hiring a property manager for your own Airbnb.
Wait.
So
So you converted them to long-term rentals, and then you
yes,
did that. Your renters are people that do Airbnbs
correct, correct, correct.
that manage
So
Airbnbs.
that manage
That
Airbnbs.
is
So they do
hilarious.
everything. So they do everything. They take care. They deal with guests. They read reviews, write reviews, answer messages. 2 o'clock in the morning. Uh, fix toilets, all that stuff. And the guests that they're getting, they're better guests. Like they have reviews and all of that, right? So, but we get a check in the mail every month.
So sorry. Like I'm clearly think I'm missing something. Your tenants have their own Airbnbs.
Yeah,
Okay.
what they're doing is they're renting from us and doing rent arbitrage. So I don't remember exactly how much they're paying us, but whatever, they're paying us some amount. Let's say it's $3,000.
Yeah.
They run an Airbnb out of our
Oh, got it. Got it. Got it.
our
Got it. Got
spot,
it.
right? Whatever they make, they make. We don't care, right? But they're paying us every month uh, on time, and we don't have to deal any of the guests.
Got it. So they're using your house to Airbnb out to other people. That's the arbitrage. But you're there for the more consistent payments on time, and you don't have to worry about the management overhead.
That's right. So it works out great for everybody. So basically, that's what we're doing with 60% of our Airbnbs. Others are long term, and we kept one Airbnb. So that one I'm managing right now. Did we ever calculate how much is it per hour? No, I I don't know if it's above minimum wage, but it's not a number I need to see. We spent a lot of time on these, and like sometimes you're doing work, like you're actually responding to guests, but then a lot of time you're not doing that work, but you're kind of like you're thinking about it. Wait, I have a guest checking in. Do we have? I thought the previous guest said there's no hot water. Or I think the batteries in the locker running low. Maybe next time the cleaner comes, I need to replace it. Anyway, it's just like this constant headache that you have to deal with, and then you're trying to create an amazing experience for someone, right? Also, like a lot of times we get guests that say, I looked at a hotel and I decided to stay in your Airbnb. But then you realize they have two dogs and they couldn't have stayed in a hotel. So they're staying in Airbnb. That's fine. Great. I mean, I like other people's dogs. And, uh, but they end up complaining still, right? They're paying like $60 or $70 a night for like an amazing spot, like super clean, clean bed, clean sheets, clean everything, like washer, dryer. And then they're like, oh, there's a little stain somewhere, or there's like, I noticed a little bit of dust in the corner somewhere. 4 stars. And that's it. And you can't do anything about it. It's just like, wait a second. Like, I've been like, I made sure you have an amazing house, clean, AC, everything. You get in, you have the code, you bring your dogs, like
There's coffee
smells nice.
there.
There's coffee
The
there.
silverware
There's
is clean.
everything there. The silverware is clean. And you're paying $60. Like, and you're complaining to me about some stain. And then you're giving me a review. Oh my God. Now, and you can't remove the review. That's it. So like now you have to get like 10 5-star reviews to cover for this one. Anyway,
But we
it's a
love our
thankless.
customers, Sasha, right? We love our customers.
I love I used to say that. I love some of my customers. I don't love all of them because some of them are total assholes. So, no.
Takes work. Takes work for sure.
Yeah, for sure. It's a lot of work.
Um, so I wanted to drive. How has the experience been with converting them to single family homes? And I guess more importantly, maybe this question instead: what is the comparison like? Or not single family homes, long term renters. What
Mhm.
is the? It's significantly lower, but tell me about that experience of having long term renters then, and especially with multiple of these. And actually, before you do, is this time you and Sophie are both pretty much kind of full time or someone part time working here? I mean, paint me a picture of how that's looking
Yeah.
because like how much time is actually available.
So this is, I probably work full time at this during all of this. Sophie is full time real estate, but she's doing a bunch of other things too. So she's done wholesaling as well. So that's another thing you can talk about. Wholesaling is another thing. It just takes a lot of mental time, and because it's the two of us running it, uh, we don't always agree on what's the best course of action.
Mm,
So it also created friction between us, which was totally unnecessary. And then we're like looking at this and we're like, okay, hold on one second. We're spending so much time on this. It's like makes us angry at each other sometimes. And at the end of the day, how much money are we making?
right.
So it made zero sense. And so and again, of course, you have competition. You can't control your competition. If 5 other people decided to open Airbnbs on your street, well, then now you have less tenants.
Yeah. Yeah.
So, so you need to find a niche. You need to do marketing, and so
You're always on it.
uh,
You got to always
yeah,
be
you're
working
always
on
on
it.
it. You're always on it. Yeah. So there's also strategies of how to deal with bad, like how to not get bad reviews, or how to deal with guests that you're going to get a bad review from, and how do you try to avoid it. So there's all these tricks uh, of this trade that people need to know. I'm sure I'm happy to talk about it, but I'm sure there are other places people can learn about this stuff too.
Yeah.
But in terms of time saving, it's immense. Like we don't long-term houses that we have, of course, things come up, of course, but it's I would say every couple of months, not every day, right? So
Wow.
yeah, of course,
Okay.
like sometimes we have to like deal with septic tank or uh, some happens, right?
So the bigger stuff, the much bigger stuff, obviously. But I mean, on terms of a not a daily or weekly, but a monthly. like, I don't know, that's got to be like a 90% savings, or so. Would you
Oh yeah,
say?
for sure. You save a ton of time, and yes, you make a little less money, right? But man, that's worth it. Like not having disagreements, not having to constantly think about that stuff, and on top of all the other things that you actually need to care about that actually makes you money,
Hmm.
or spending time with family, right? Like,
Yeah.
so yeah, we're so happy we don't do 10 Airbnbs anymore. Just we're just doing one. So.
What would you, percentage wise, what do you think that ends up, coming down to, like 10%, 20% less or so?
Yeah, it's about 20% less, let's say. Yeah.
Got it. So 20% less, significantly less overhead, significantly less stress. And so the opportunity cost of that to have something more stable, to not be at your, partner's throat, and, hanging out with family and other things while you're still getting cash flow, you're in the black, the positive, and you're getting appreciation for them too.
Yeah, yeah, exactly.
So I'm glad we got to talk a little bit about the Airbnbs and the long-term rentals. So if there's someone who, what would you say to someone who's like, Sasha, man, I've been at this tech thing. I've got, restricted stock units, RSUs. I've got cash in the bank. I'd really like to do this real estate thing. I saw this really cool thing about Airbnbs. I'm thinking about doing buying a house and renting it out. Like, who can you recommend for a contractor, or like, what would you tell this person who's wanting to get into real estate? Like, should they go single family homes? Where would they start? Like, what questions would you ask them? How can they define this for themselves?
Yeah, I would first ask, maybe why, right? Why invest in a different asset class to begin with? Right? They're probably investing already in a stock market, and well, whether they are or aren't, why diversify? Why go into real estate at all? And then kind of get them to understand that every asset class you invest in has pros and cons, and uh, there's a big uh, kind of differentiator between passive investments and active investments, right? Even in the stock market, right? So
Can you
you
give
can
us
be a
some
day trader.
examples?
Yeah, I mean, you can be a day trader. That's super active. Like I was in an Uber with a guy recently who said, "I do day trading of not even stocks." He said he was doing day trading of gold, and so he's super active all day. He sits and does this, except for Mondays, he said, and all other times he drives his Uber. But anyway, it's time consuming, right? That's not for me. I know that. I don't want to spend, this is not my job. I don't want to spend time doing that. I want my money to work for me. I want my money to make money. I don't want to work to make money. Like I'm already doing that with a day job,
Hmm.
right? I don't want to do more of that. So, so the thing with Airbnb is there are plenty of funds, and I can recommend some as well, where you invest in Airbnbs, where someone else is running them, and you don't have to worry about it. You just, put your whatever minimum investment is or more, and you enjoy you ride that roller coaster, right? You enjoy the ups and downs, whatever. But you're
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 passive.
investing in Airbnbs,
Yeah.
yeah. So you can tell that story at a party, right? So, but you actually can also say that you don't have to deal with guests. I remember 2 years ago, I was working at a company, and a peer of mine said, "Hey, my husband and I are looking at getting into Airbnb, and we just bought some property in somewhere in Colorado." And I remember thinking, "Oh my God, if you're just getting into this, and I'm already dying to get out of it for about a year, think you're late." I'm late. I think you're really late. So yeah, I mean, again, if you really like, if your dream is to run a hotel, if your dream is to be in the service industry, to create experiences for people, you need to know that that dream comes with a side of a bit of a nightmare of dealing with certain guests that are not wonderful people, that are not treating their property the way you think it's going to be treated,
A lot
and
of
they're not
management
treating.
overhead, a lot of hours studying and trial and error too.
Totally, totally, exactly. And then you do marketing for that property and all that stuff. Or again, you hire someone who does it, but then you really are just invested in one location. So just invest in a fund that invests in Airbnbs, or just invest somewhere else. But again, I to me, the whole hands-on Airbnb thing, the only moment where maybe it makes sense, if you're investing in some kind of a destination Airbnb, like a resort or a beach or whatever, that you plan to vacation in yourself, that you want your family, your friends to vacation in as well, and you have full-time staff, someone else is dealing with it, someone else is running it. Yeah, I think, sure, obviously check the numbers, but as long as you don't have to spend time on managing it, I think it's okay, right? And but again, like, remember, are you doing this as a hobby, as fun, or are you really looking at the, like, to get income from this?
Yeah.
Um, so
I think
different questions.
that's the other range too. Are you doing this for cash flow and for investing purposes, or are you doing this for the perspective of, like you said, you want to be like a vacation spot and kind of a place where you can have for quality of life? Because those are two different things, right?
For sure. Yeah. I mean, just remember, like, there's a lot of work here, and some of this work you're gonna like, some of it you're not gonna like. But just remember, this is hours and hours and hours of time invested all the time, not just in the beginning.
So going back to the person who's asking, it's like, hey, my job's demanding already. I work 40, 50 hours. And I've got this cash, but I'm interested this from the cash flow perspective, right? Like it could work, but there's a lot of hours as well for Airbnb, like you're talking about. But would you talked about investing in like a type of fund as well for Airbnbs, but what about for like a single family home? Would you recommend doing that and going to rent it out? What would you say to the person who is interested in something like that? Who's the right person for that?
I think it also depends on the home itself, right? If you're just doing what we did, I don't recommend that, right? If you're thinking of creating a sort of a destination that's Instagrammable and memorable and special and entertaining, and has a pool and arcade machines and beautiful walls that could serve as amazing Insta backdrops, maybe there's some opportunity to do that. But again, that's a huge investment that you have to make before you see any results, and it takes time for that um, to come back as profit. Um, but yeah, again, if you have a lot of time and you enjoy dealing with people, and sometimes unpleasant, then do it, right? But only do it the way I described. Don't just get a 3 bedroom, 2 bathroom, painted like you would for long term, and expect to make a ton of returns.
But the long term one, doing that on the side, like focusing on more on the long term rentals, if that was the
Mhm.
strategy. If someone wanted to say, "Hey, I've got some time on my hands, but I'm interested in doing a long term, rental," what would you
Mhm.
say to that person? Like, and here's how I mean that, because one of the things that I really ran into is, I bought a couple rentals too, but you can only buy so many, and you can only do burr so fast, and you can only use so much of your own capital, right? But at the same time, you and I have burned a lot of hours learning and doing things. And so, if you're considering someone who's already a busy professional who wants to invest in real estate, who's interested in more of the cash flow from, and maybe some upside appreciation, does going after one or two rentals make sense for them?
No, I would say it doesn't scale, right? I think these days that, yeah, it makes sense if you want to buy your own house, right? As your own prop, okay. But it just doesn't scale at some point, and it still requires work. You're also dependent on the location, the market. I think what makes much more sense is to skip all of that and just go directly into multifamily investing, because it's way more scalable. It's passive. You don't have to do the work of choosing the location, rehabbing, screening tenants, even long term, screening tenants, dealing with evictions, which we had to do, even as long term uh, tenant renters, landlords. Anyway, yeah. So skip. I would say skip all of that. Just go directly into multifamily investing. The minimum ticket is usually like 50K, which is what you would typically the minimum would what you would put as a down payment for a house. If you think 20%, and just offload all the work, and just look at the returns. I am invested in a bunch of deals like that for the past 2 years. We have, I think, five in total that we invested in, and I do enjoy the monthly distributions. Uh, think of them as
Before we get
dividends if you're used to. Yeah,
before we get into that, tell me, how did you
yeah,
go from, like, how did you end up finding multifamily? Like Sophie and you had been doing
yeah.
these Airbnb and single family homes. How did you guys find out about, apartment investing or multifamily investing, and kind of what was that aha? Did you guys both come to the aha moment? What was yours?
Well, my aha moment was, oh God, I don't have to deal with people anymore, these tenants. I don't have to drive to, in the middle of the night to open the door for someone. Fantastic. Sign me up. Uh, and so that was easy for me, right? For me, it was just, you know, logically, the investment made a ton more sense. I think we first heard about it through a meetup in Austin, an incredible meetup run by a guy named Ken, at a place called Casa Chupala,
Yep.
every Tuesday or Thursday, I forget. But
Tuesdays. Yep.
Tuesdays, yeah. Ken, forget his last name.
Harris,
But
I think.
Harris, that's right. Yeah,
Hmm.
Dan Harris. Awesome guy. Anyway, we started showing up as a commercial real estate investing group, and multifamily is one of those things. And so, yeah, it kind of made sense. We started doing more research. I ran into Brad Sumrak, who actually showed up there one time when we were there. And then we ended up going to one of his events in Dallas. So that's the story. But to me, it was easy. It was just, as an LP, as a limited partner, as an investor, a passive investor in these deals, it makes so much more sense than doing single family stuff. It scales more. You can diversify more, and you're investing in an actual business. Like that's the biggest difference for me. Like, yes, it happens to be real estate, but you're investing in an actual business that already has profits. And that contrasts also positively with a bunch of people that I know that invest in startups and a bunch of other things too. So anyway, it's a business that's
It,
generating
it,
income.
expand on that, because I think that's
Yep.
such an important point. You're talking about how it scales, right?
Mhm.
Economies of scale, and give me some examples for that. But also tell me, like you're saying, like it's an actual business, because some people are listening. They might have worked in tech, and they're like, well, it's a business. So talk to me about the scale, and talk to me how it's an actual business.
So on the scale side, you can buy one single family house, maybe two, maybe three. I guess it depends on the area. And a cheaper location, maybe like Oklahoma, even like you get 10 or
Hmm.
20, but there's still, uh, if your money scales, your time doesn't. Like there's still 24 hours in a day, and you still need to sleep hopefully 8 hours a day. Uh, you just you can't take care of all of these. But you can invest in a deal that, or in a building that has 100 units, because someone else takes care of it. There's a company that takes care of it, and so it's a completely different scale. You can invest in a 100 units business here, 200 unit business over there. You have geographic diversification if you want. You have, also it's a different asset class, and you're it's a business that has income, has expenses, it has professional managers for that business. It's not amateur, right? Kind of like what Sophie and I were doing, right? We're amateur landlords. Like we're not professional landlords. So we had to learn a lot, how to craft a leasing agreement that protects us. and how to do evictions, and all of that stuff. Well, there are professionals that do it, and professionals means they do it cheaper because they do it all the time. They have scale. Uh, you don't have to spend as much time and money on that.
Yeah.
So yeah, I mean, to me, I looked at this and I saw businesses. Yeah, and then they happen to be in real estate, and just like a store where you have customers, you have a building that has tenants, so the customers. So
100%, 100%. And I think it's, the professional management aspect for like every 100 unit, 200, 300 unit apartment complex, multifamily complex has a leasing office. They have at least one or two people there. They have maintenance people there to repair things. Like you said, they're professional. I mean, especially in tech, we want to template things. So, lease agreements. I mean, this is automated, it's like it's all there. It's rinse and repeat. So, to have that quote unquote resilience, well, if one tenant or one person leaves, we have a process to not only move them out, repair it, quote unquote, turn over the unit so it's ready for the next person to come in. And the business model is easy for us to understand. Is well, everyone has some place to live, right? So, I love the store analogy of you have those customers that are coming into those customers just tend to stay for a little bit longer than leaving the store, right?
hopefully, yeah.
Yeah. What were some of the what were there any concerns of yours? I think about what you were just saying about the, oh man, oh shit, I'm about to sign this loan or whatever for your fifth one. Did you have any oh shit moments, or thinking about I'm not sure about this, moments when looking at multifamily investing as a limited partner?
The only Well, what I realize in multifamily, when you invest in these things, you're you're really investing in the operator, not necessarily the business. It's just, I mean, look, I mean, look at the successful founders in our industry, right? Look at people that are serial founders, uh, who've built amazing companies and left them and built other successful companies, right? That's why you invest in people, not necessarily uh, the asset. So that line of thinking resonated with me. And when we were looking at our deals, our first deal to invest in, uh, I know that we did the due diligence. Like we researched the person, we met with them, we looked at the businesses and the buildings that they ran and that they still run.
Mhm.
We looked at how successful they are, how well they're doing financially, and yeah, it wasn't hesitation. I mean, $50,000 is a lot of money. Don't get me wrong, but coming out of an experience of buying 10 houses in Austin, right? That didn't seem like a crazy amount. So we did one and then we did more. It was again, like, it just happens, and then you have you don't have to do anything. So that's the thing that appealed to me. Again, again kind of like looking at it as a stock market investor, right? Which many of us are. You just buy your ETF and it pays you dividends, and you go to sleep at night, and you wake up in the morning, and you and 5 years later you get your huge return. So that's kind of the idea.
Talk to me about that. You're talking about limited partner. This is the passive investing perspective, right? And someone's thinking, okay, if it's the first time they're hearing this, it's like, okay, this Sasha's guy is telling me the comparison up to 50K. Cool, definitely. But like, what do I get in return for this? You talk about 5 years later, but like, what do they actually, what can someone expect over that 5 years?
Yeah. So what's a limited partner? It's basically all of us are limited partners to an extent. If you're investing in any stocks in the stock market or ETFs, you're a limited partner. You're an investor. You give money to a company, but you have no say. Let's say you invested in Uber or Meta or Amazon or whatever,
Mm-hmm.
choose your stock. You give that company money. The company decides what it wants to do with that money. Are they hiring people? Are they buying equipment? Are they investing that money in another company that they're buying? You have no say. You're a limited partner. So that it's exactly the same thing. You're giving your money to an operator of a business, that decides what is the best usage for that money. It could be hiring a maintenance person. It could be hiring a better maintenance person, paying them more. It could be replacing the roof. It could be replacing the stairs or painting the outsides. Whatever it is, you have to trust them. And this is why I said you need to choose you invest in the operator. Uh, you have to trust them that they know what to do with that money, how to spend it in a way that benefits the business, that grows the profit of the business and reduces the expense of the business. That's what all of this is about. Any company. So yeah, I think that's kind of what what I think of it as an LP. I use that term, and it's a term widely used in the real estate world. But
Mhm.
for some reason, we don't really think of ourselves as LPs when we buy a stock.
Totally.
But we are.
So, what do they for the deals you've invested in? Not to go into the specifics of those ones, but I know there's other terms. You're talking about LP, and I've mentioned some of these on
Mm.
different episodes. But just to kind of put it in context here, since we're talking about, like what do I get at the end of the 5 years or so? Talk to me about like returns. You said earlier
Mm.
something like monthly. Is it do you plan to get like 20% on your money? Do you plan to double it? Do people talk about cash flow, tax benefits, appreciation. Do you get any of these things too?
Yeah. So there's yeah, where do I start? Okay, so let's talk about monthly. So some of these investments, just like in the stock market, there's dividends. Some companies return dividends, some don't. Some pay dividends quarterly, some pay annually. It's a similar deal here, except here they're called distributions. And what these are, they're not large sums of money, but it's sort of I look at it as a vital health sign of how the business is doing. Uh, for a 50K investment, it's not uncommon to get 150 to $200 a month in a distribution. It's which is not a ton of money, but it's still a really nice check to receive. And when I say in 5 years, the big payout, typically these investments last about 5 years. It could be three, could be four, could be six, but the goal, the ballpark is 5 years. What it means is that for the duration of those 5 years, as opposed to the stock market, you cannot get your investment back. And I think that trips a lot of people up. And I understand why. I understand why, right? Because, it's a sort of a perceived loss of control, right? Like, well, what if I need that? Well, what if you know, uh, yeah, think of it as a CD, right? That you put in the bank. You get a 12-month CD. You can't touch it for 12 months, right? I mean, maybe you can, but you have to pay a penalty.
Mm-hmm.
It's the same thing, right? You invest your money. It's a long-term business investment, right? A business needs time to improve, right? If you're investing in a business, and you have to improve the profits and increase the profits and reduce the expenses, well, it takes time for that to propagate, right? These tenants that are customers typically have annual leases. So if you want to improve a unit and rehab a unit to get more value out of it, you have to wait a year sometimes. So you're not going to see an improvement in that business right away. Typically, it needs time, and it makes sense, right? So the time here, the time bracket is about 5 years. If you know you're going to need that money within 5 years, then don't invest. This is not the right investment fee. Don't invest your last 50K in an investment that you can't touch for
Totally.
5 years. That's
Totally.
doesn't matter what the investment is. Uh, but but for those that can wait 5 years, it's a really amazing vehicle because it not only it gives you really great returns. Uh, there are also tax benefits that you mentioned that most people don't think about, that don't exist in the stock market. So what's great about this is that the as an investor in a business, and that business has to spend money on capital expenses, improvements, right? That's a business expense. So for those of us who run a business, if you have to buy a laptop to run your business, even as a solopreneur, that's an expense that you can write it off. Same thing happens in a building when you have to replace a rooftop or an AC. Uh, that's those are tax deductions. So that gets passed to the investors, people like me, and we get to write those off against all of our other income, which is amazing. So yeah, definitely benefited from that for the last couple of years.
Absolutely. Pro rata based on however much, how many shares you get for that investment you've made. Key point.
Correct.
And then at the end of the 5 years, you're talking about like from the deals you're talking about monthly returns, but there's also what you're seeing in a lot of uh, when you're going to invest in deals, equity multiple. So, are you at the end of the 5 years? Are you looking to do a 2x multiple to double your money in 5 years?
Yeah, it's about to, and I think the deals that we were looking at, and there's tons of deals out there, but the deals we were focusing on in the last year and a half that we invested in, they all have between 1.9 and 2.1 return multiples. So what that means is basically 2x return is doubling your initial investment.
Do you? I mean, I remember learning about that for the first time, and I'm like, whoa, 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 whoa. So, I mean, are you expecting to get that kind of thing? Or, I mean, how does that compare to what you've seen in the stock market? Like,
Well, if you look at 5 years, if you take 5 years for 5 years, right, and it's hard. I mean, if you look at 50 years, we're looking at an average of 8 or 9% return, right, a year in the stock market. But last year, the stock market is doing pretty great. It is like something like 20% or even maybe even better. So uh, this isn't. I mean, I think stock market is a wonderful thing. I continue to invest in the stock market, and I believe it's an amazing vehicle to increase your wealth. But I would also say that if you're missing out if you're not investing in multifamily real estate or commercial real estate, for that matter, because of the tax advantages and the returns that you get. We all get distracted. Like, look at my $10,000 fund of just play around with it. What do you think happened most of the time to
oh,
those investments? they
you
they
lost
did
it.
not double.
Yeah.
Yeah, they did not double. So it's sort of to me, it's a no-brainer. If you take the combination of tax benefits, returns, risk, and the amount of time needed to manage these investments, it makes a ton of sense. That's kind of where we're going. And if anything, we're looking to offload all of our long-term, short-term, single-family homes at the earliest convenient time where it makes sense to do so. But which just means more investment in the multifamily state.
Cool. I'm glad you mentioned that. I know we're a little bit past some of that time, but I think kind of talking about where you are now before closing out, I think would be really cool to finish this story. So, what is your sort of your investment thinking here moving on forward? Is it just to continue to do more and more multifamily and other assets and getting out of single family homes when the time is right?
That's right. Yeah, I think we're now looking at multifamily only, and we'll have, of course, some money in the stock market, but we do want to get out of uh, single family homes. It's just a ton of maintenance, taxes, hassle, and not a ton of returns at the end of the day. Like you hear a lot stories like, oh, I bought this house and 20 years ago I only paid 200,000. Now it's worth 400,000. Wow. I mean, okay. Well, you hold on one second. What happened to all the property taxes you paid and the 6% you're going to pay when you sell it, and then the taxes you're going to pay on the profit, and the maintenance you had to pay throughout all of that time? Is it still double? I don't think so. So, so I think that's kind of like the situation here. I just wish that I could go back and convince myself and Sophie to skip that whole step of investing and go directly into multifamily, get introduced to it sooner. So we didn't have to deal with all that stuff. But on the other hand, man, many life lessons and growth happened through through those uh, struggles and wins and losses and all of that. So, can't change the past. Don't want to change the past. But anybody new getting into it, I'd say, if you want to get your hands dirty and learn and uh, go for it. Get a single family home and do your Airbnbs. But really, for the rest of you, skip it and just go directly to multifamily.
Awesome. And then before we close out, just talk to me about your kind of perspective. You look at the world of multifamily through a customer experience and product lens. I just want to come full circle on this because I think it's so key to hammering all the time. Everything is about being customer centric. Customer centric and product. How do you think about this? Give us your 2 cents in a minute or two around this.
Yeah, I'm glad you came back there because that's sort of the lens that I look through when I look at potential investments. And a lot of these investments that we focus on multifamily, I mean, that's a huge array of vast types of investments in that too. We didn't talk about it, but we typically focus on uh, places where you can add value as an investor, where an operator can add value, take an asset that's not currently performing as it could. And so to do that, again, as a designer, as a product person, I look again at who's my customer? How much can they pay? What do they look for? Do they have kids? Do they have are they young people or they're older people? And kind of go from there because you can create a lot of amenities and waste time because you just didn't think through who your audience is.
Mm-hmm.
If you look at a lot of these properties, right, a lot of them have pools, and pools are like they're cool to look at. Uh, but I've never seen. We've done so many tours of these properties. Not a single time have I ever seen anybody one time using a swimming pool. Like I've been to properties with two pools and like nobody used, right? So okay, but they cost a lot to maintain,
Yeah.
not just in terms of like electricity, water, utility, and like cleaning and all of that. uh but anyway, one property we went to recently, it's an older property, it had it all filled, just kind of like totally filled, and the idea was to put a playground on top of it, which made so much sense. Like put ton of lights and make it fun for kids to hang around. So anyway, that's an idea of just like creating some value for residents, putting more outdoor lighting at night, making it feel welcoming and safe. Uh, and then also kind of like if you think about the future, right? People didn't buy cars online 10 years ago, right? But these days people do that. And people rent apartments online and all of that, right? So do you need a 20, like leasing office with people in it, right? Maybe sometimes you do. It depends, right? Maybe for some properties you do. But a lot of that stuff can be done online, and tons of technology can be added to improve the quality of life, like Wi-Fi and all of that. So
Totally.
tons of opportunity to use technology as well.
Yeah, I love that. I love that because you're talking about audience. It's who's going to be living there, who's the resident, what would improve their life, right? Massive. Just taking care of people in that sense too, like who's going to be there. So I appreciate that. You've dropped a lot of nuggets along the way here. I'm just wondering, as kind of a classic closeout, I like to ask if there's one thing, that you would think about that you would pass on to other investors to think about when they would get started. Well, one thing that you would tell yourself, 10 years ago that isn't start out with multifamily investing, what would that be?
I would say start with someone you love. Don't go alone. I got lucky because I had an amazing partner in this, and I'm grateful for that partner. It's wisdom and sometimes not, but just have a partner, someone you can debate with, you can uh, agree with and disagree with, and learn from. So yeah, just have a partner, have a mentor, have a partner. It's better to go together. You go farther, maybe slower but farther.
Outstanding. Yeah. Yeah, that one hits me too for sure, dude. Where can people find you? People want to connect with you, Sasha. Talk to me. Where can people find you? And what kind of conversations you want to have with them?
Oh, I love talking about real estate, technology, product, digital products, design, of course. Love talking about food, travel. Where you can find me in Plano, Texas, and you can email me. Use my first name, dot last name at gmail.com. And yeah, I'd love to hear more about what you're going through, how I can help. And yeah, happy to make friends here as well. We're new to Dallas. So if you're in Dallas, reach out.
Outstanding. Awesome. Thank you for being here, Sasha. I do appreciate you. Enjoyed this conversation, dude. I'll make sure all that's in the show notes as well. So have a go look there for Sasha's contact info. Like you said, reach out to him, have some great conversations. Appreciate it.
Amazing. Love it.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.